All right, welcome everybody. This is Dr. Keith. Thank you so much for attending. Hope you're all doing well on this Thursday afternoon. Before we get started, let me just first start out with our risk disclosures, and then we'll get into the good stuff, okay? Basically what this is saying that everything we talk about today is for educational purposes only. And careful consideration of your financial positions should be made prior to trading. So bottom line, what does this mean? You should only risk money that you can afford to lose, okay? You don't want to risk money that you can't afford to lose. And again, I am not a registered financial advisor, nor am I a licensed commodity trader. But I do have my doctorate in finance and I've been trading the markets for over 12 years. This webinar is being recorded, and at the end of this recording, we will send this out to everybody, and there'll also be a trial and some links if you want to get started. I will look at questions throughout the webinar. I'll do some short pauses to see if I'm missing any questions and so forth. And at the end, I will also leave time for question and answers, okay? Okay, so a little bit about myself. I have my PhD in finance. I'm a university professor as well as professional trader. I've been trading and teaching finance investing courses for over 12 years. So I got a lot of experience in all kinds of different trading, from futures, Forex, stocks, ETFs, day trading, swing trading, multi-time frame analysis. I've been lucky enough working at the universities, they give you time for research. And so I've been extremely lucky over the years to be able to spend their money and use their time that they pay me to do my analysis. And one of the main things I've learned throughout my trading career is the power of seasonality. That's why I started going public now a few months ago with Right Line Trading to kind of show you the techniques I use and the power of using seasonality to predict movement in the market. So long story short, I became fascinated with the seasonal concept. I went to a webinar, I went to a conference several years back, and with a guy named Larry Williams. And when he showed me some probabilities, it would amaze me. When you look at probabilities and how likelihood a particular stock, ETF, futures, or Forex, the probability of it going in a certain direction during a certain window, think about if you know that, how valuable that can be for you to be successful in trading, right? Then it's all about, okay, once you know that high probability, looking for that trigger, okay? So once I started learning about, wow, there's a particular, for example, there's a particular market during the next couple weeks to go in a certain direction 90% of the time over 40 years, right? Two advantages of that. One, you probably don't want to try to go in the other direction. And then two, if you have a good trigger, it's a pretty easy way to make money, okay? So once I learned the seasonality aspect, I've dedicated the rest of my life and my research to continue to be successful at it. It's amazing. It's very, very powerful, folks. Very powerful. So again, that's my specialty. That's most of my trades, and I would say 99% of my trades are based off of seasonality because I want that edge. You need an edge in the markets to be successful long term. What I do is I swing trade seasonals from a daily chart. And the reason I do that is, I've done a little day trading recently. I enjoy parts of that, but for me, it's more lifestyle. I like to set my trades up, put my stop in, put my profit targets, and then walk away, okay? I like to spend time with my family. I like to do research. I don't want to be in front of the computer all day long. So that was the other thing I love about swing trading seasonals is that I can set up the trades, do my research, and then walk away, okay? And those of you that have full-time jobs, you can place the trades in the evening or early mornings, walk away, not have to worry about it. You know what your risk is. you know what your potential profit is, and you can let the statistics work for you. Okay. So again, generally speaking, when I talk about seasonality, in case you're brand new to that concept, really all it is a predictable pattern. And almost any underlying you might know about, whether it's a stock, an ETF, a futures, they usually have some really strong seasonal influences throughout the year. And we're going to go over a lot of live charts, give examples, so bear with me. But again, just think of the concept that if you have an 80 or 90% likelihood something's going to go in a certain direction during a 1 week window, a 3-day window, or a monthly window, think of the power of that. In fact, one of the things I do is if there's a good seasonal that's maybe, let's say, 6 weeks long, okay, I'll get into the trade. Once I hit profit target 1, I'm going to show you this concept. I'll then put a break-even stop on my other contracts. So all the risk is off the table, yet the likelihood that that particular underlying is going to go higher is extremely high. And if I get stopped out of break-even once that happens, I'll go back in. So I won't just go in a seasonal once. If there's a 6-week seasonal, many times I'll go in several times, making money based off of that. You know, markets don't go straight up or straight down, right? So let me just give you a high-level example here on some of the power. A lot of you probably know what the S&P is, so I thought I'd give this example. Typically around the 2nd week in November through December, the S&P is extremely bullish, okay? And this data is based off of the price being higher from the 2nd week in November till the end of December. The price has been higher 32 out of 36 years, okay? 88% accuracy. So does that mean I just go in blindly around the 2nd week in November? No. But what this tells me is during the 2nd week in November through the Christmas holidays, with my style of trading, I only look to go long based on my triggers during that time frame, okay? Excuse me. So if you know that, you can be much more successful. Let the odds play in your favor, right? Okay, I'm just going to pause here and see if there's any questions coming up here. 1 second. One question was, what is the average holding time? And we'll get to that, but that's a great question. So some of my trades, I'll get in and get out the same day. But again, when that happens, as soon as I place a trade, I have my stop loss and my profit target set up in the system, so I can walk away. So there's been a couple of trades recently that I got in, then price immediately moved my direction, and I got out of the trade in 1 day, okay? Some trades I've been in for 2 or 3 weeks, especially if they're runners, which I'm going to talk about. So it really depends. The longer I'm in a trade typically means that I'm making money with no risk, okay? Which is a lot of fun, folks. So that's a great question. But the average time is pretty hard to say just based off of every trade's different. But I would say the average trade hitting profit target 1 can be anywhere from 1 to 3 or 4 days. And then once that happens, I eliminate all my other risk, which again, I'm going to explain. Great question. So how do I do this? Again, this is not a new concept, folks. Seasonality's been around for a long time, you know, and what I've done is I've used a lot of different resources over the years. There's a lot of computer programs. I've gathered data, and then I've done my own back testing to really create my own library of really high accurate trades, okay? I use watch lists based off of that, and then based on these other triggers and so forth I'm going to talk about, you know, that's how I do my trading day. So again, my life revolves around, my trading revolves around looking for trades with high probability setups. So I scan for these based off of my past history, my back testing. Every week I look at these I use a daily chart as my entry. So again, I trade off of a daily chart. Typically that will be my setup. And then I have several triggers. And you may ask, well, why do you have several triggers, right? That's a good question. Reason being is when you have a high probability setup, I usually take the first trigger that triggers because I know I have a high likelihood of making money on that trade, okay? So I will use triggers like momentum, moving average channel, divergence. Divergence is an extremely powerful tool when you can identify divergence. I also use big picture indicators like commitment of traders. Small trader sentiment is extremely powerful as well because unfortunately most small traders are going in the wrong direction of the trade. So when you get an extreme small trader sentiment saying, okay, this particular underlying, let's say 80% of traders are short, then you can almost bet the price is going to go higher in that case, okay? And then I also look at how the trade worked out in the past, okay? We call that the seasonal pattern mirror, meaning if price is acting odd compared to previous years, I'll probably pass and go on to the next trade. So I have several triggers that I look for. I usually use the first trigger. I only look at trades that have been basically 80% or higher of making money in the past. Okay, again, if you can win 8 out of 10 trades, you're gonna be a happy camper, aren't you? And then my risk, which again, I'm going to go over examples in the live chart here in a minute, I will risk up to 2 times my initial target one. Okay, and again, you've got to put your mind frame in swing trading. If you were day trading, that would not work out, right? You can't have 2 times your initial risk when you're day trading. But when you're swing trading, you got to have room for it to run and go in your direction. Okay, and again, my current win rate this year, trading live with everybody, is 89%. So if you can win 89% of your time, you can have that type of initial risk, right? So that you can give it room to run and hit your profit targets. Okay, so now what we're going to do is I am going to go over to some live charts, and I use THINKORSWIM when I'm looking at they're my broker and my charting package for the most part. So I'm going to use THINKORSWIM. Certainly, you can do this on any of your brokers and so forth. Or if you're brand new to trading, after this, send me an email. It's also on a slide. I can give you recommendations as well. Okay. All right. So I'm going to switch over to the live charts. Okay. So this is the Australian dollar, okay? And typically what I look for, and again, I've simplified my charts because I don't want to have a bunch of indicators on here so you can't see the prices and so forth, okay? So just focus on today the concept of the seasonal. So in this case, this is April 9th, okay? There's a really good short 2-week long for the Australian dollar. We're right around the first 2 weeks of April typically. Okay, so I add that to my watch list, and based off of my research, I keep an eye on this. And again, these are all trades I did with my service live, so this is all verifiable and so forth. Okay, but I went long right here on April 9th, came up a few days later, hit profit target 1 right here. Okay. So why is that a big deal? Once I hit profit target 1, I then move my stop loss, which we'll talk about in a minute, up to break even on my other 2 contracts, okay? I typically trade in multiples of 3, so let's just say 3 contracts. So profit target 1, I'll take 1 contract off. I'll then move my stop to break even on my other 2. Okay, so now you have no risk in the trade basically, right? And worst case, what can happen? Well, just like what it did here, right? 2 days later, it came and stopped me out of my other 2 contracts. Many times, it'll continue to run, and I'll show you some examples of that, okay? So in this particular example, if you were trading the regular size Aussie dollar, you're risking with 3 contracts here, you're risking $3,500, okay? Or if you're going to use the micro contract of the Aussie dollar, okay, you can trade micro contracts, which is roughly 1/10 the size. You're only risking $354. So again, if you have a $2,000 or $3,000 account, you can absolutely use this system. Okay. Profit target one, what I made was $830 on one contract. If you were using the micros, $83. Okay. So on that trade, I made $830. Now let's talk about margin. Okay. So if you're using the regular size Aussie dollar, margin is $1,375, which is what you need to do to hold it overnight per contract. So again, you can see how that can add up. If you have a $5,000 account, you're not going to want to trade 3 contracts, right? If you're using the micro account, though, you only have $137 of margin to hold overnight, okay, per contract. So you can certainly do that. And the micros are a great way to build up those small accounts. One of the questions I get is, well, what if you have a $5,000 account? What do you do? Do you do micro? Do you do regular size? I recommend one of 2 options with a $5,000 account. First, if you use the micros, you can do the 3 contract system with a $5,000 account. Okay, so you can see the advantages of using a multiple contract system, or you could do just 1 contract of the regular size, and at profit target 1, you take profits. Okay, I'm going to show you the results of what I've done live with everybody this year in a little bit. Okay. So again, knowing that there's a good seasonal long play, first 2 weeks in April, I just took advantage of it. Okay. I'm going to check real quick to see if there's any questions. Okay. Okay, next one. Let's go to the euro. So the euro has a real good seasonal short in June, 2 weeks, okay? Very high probability. So right here on June 5th, I went short. But again, as soon as I place the trade and I do my video newsletter, I have my stop loss, my profit target, and my enter point, okay? They're not all market orders. Sometimes they're limit orders. Again, I'm going to show you examples of different types. So I got in here. The trade went against me for a few days here. You can see, came up, came close to hitting my stop, right? Then we had the big candle down, and I hit profit target 1 here, okay? Profit target 2 was right about here. Didn't quite hit it in this particular trade, okay? But once I hit profit target 1 right here, my other 2 contracts, I moved to break even right here, right? No risk in the trade, and I made money. So if you were trading 1 contract, you would have made $1,250, or if you were trading the micros, you made $125. Okay? So again, depending on the size of your account will depend on whether you trade a micro or a regular size contract. A lot of the feedback I've had over the last 3 months too is folks like to trade options. So as an example, FXE, you can trade options as well with the seasonal aspect, okay? And because of the feedback from all of you so far during the 3 months that I've been public, almost every trade I do now, I'm trying to put an option trade in for you if it's viable, okay? The good news is if you have experience in options as well, you can use this type of system and create your own option trades as well, okay? But in saying that, I'm trying to add more and more option trades, which allows you to build small accounts up as well with little risk. Okay, next trade, British pound. So I'm giving you 3 examples of currencies right now. I'll get to others, okay? So the British pound. This one has a really good 2-week long, starting in April, like first week in April. So again, based on the way I enter, I don't just enter the first, second week in April. I wait for my triggers, okay? I got in here. 1, 2, 3 days later, I hit profit target 1. So again, the beauty of that, then I take profits on my first contract. I move my other 2 to break even, and I'll see how much money I can make with the runners, okay? In this particular case, it came up and hit profit target 2, right here. So I made profit target 2 profits, and then it came rushing down and stopped me out right here at break even on my third contract. Okay, so basically on this particular trade, just move that over. Target 2, I made 1787 using the regular size contract, or if you trade in the micro, you would have made $178. Okay, on just that contract. You add together the $893 or the $89 based on the micro, right? That's your profit for this particular trade. What was my risk? My risk based off of the 3 contract system, right? Because I'm trading 3 contracts here, so you have to have your stop based off of 3 contracts, was $37.50, or again, $375 using 3 contracts on the micro, right? The overnight margin is basically $450 for 3 contracts on the micro. Okay, let me show you something too. If you do have THINKORSWIM, if not, you can get with your broker on what the overnight margins are for the micros. But with THINKORSWIM, you can go right live here, and I'm going to scroll down to a lot of the micros. They usually start with the M's. So the Aussie dollar, okay? The initial margin, which is the overnight margin, is $137. So that means you have to have $137 in your account overnight in order to trade this, right? The British pound is 176. The euro, 253. E-micro gold. A lot of you like to trade gold, right? I do have tremendous seasonals on gold, 341, and so forth. So again, using the micros is a fantastic way to build up small accounts. Other things as well, I'm going to give you an example of crude. So the regular size crude, right, it's a pretty big contract. You have $3,200 of initial margin you need, a little bit of risk. So if you have a smaller account, you'd want to stay away from that. But you can go to the mini crude, which is right here. QM is half of that, half the risk. Okay, and we're going to give an example of that. Or the mini natural gas, 330. So there's several micro accounts and underlines you can trade. There's a silver, there's a gold, there's the mini gold as well, okay? Lots and lots you can trade. If you like to trade the grains, I'm going to show you a good trade I'm in right now on corn, okay? The initial margin on corn for the regular size is $880 to hold overnight, okay? If you go to the micro corn, right here, $176, right? Basically 1/10 the size. Okay, so I hope that was valuable to see that other than just trading options, you can also trade the micros. Let me check for questions here. So what do I consider a small account? Typically, it's about $5,000 or less is roughly a smaller account. So again, if you have a $5,000 account, what I recommend is trading 1 contract on maybe the currencies. Like for example, you wouldn't want to trade 1 contract on the S&P. It's just too much risk to hold. Okay, let me just show you. So again, going back to the E-mini S&P, you have to have 6,100 just to hold that overnight, right? But what you can do with an account with 5,000 or less, you can trade the micros, or you can trade options. Certainly, a lot of folks will start with $2,500 to $3,000 and just trade micros. Okay, that's a good way to build up that account. To then eventually, if you like, you can then go ahead and trade regular size contracts. Okay, it's about building that account up, right? I've been there, folks. That's one of the things I did over the years. You know, I built account up, I've lost it, and then when I found the seasonal concept and the discipline to follow these system that I've learned, you can build instant, consistent income. Okay. All right, let me show you crude oil. Big down day yesterday, huh? So, crude oil. On April 25th, right here, this is the trade I want to show, okay? I'm sorry, right here. February 27th. I got in. There's a really good seasonal long for really March and April and part of May. Okay, so during that time, I'm only looking to swing trade long on crude. So I got in. Price went against me. Came down. Didn't stop me out. My stops are the end of the day stops. So when I put a stop at $60, okay, I don't use hard stops on that. I have a safety stop. I don't want to complicate it too much for today, but of 2% below that in case, you know, something crazy happened. But I have a stop, end of day stop. So if this would have closed below 60 on this particular day, for example, or this day, then I would be out of the trade, but it never did. Now, that makes some people nervous, but I do have a safety stop down here, 2% lower. So what I tell folks, if that makes you nervous, just keep one hard stop, especially with a small account. If you get stopped out, you move on to the next trade, okay? But anyway, so based off of my rules, it went sideways, came close to stop me out, and then the move came, okay? So I ended up hitting profit target 1, made $1,890. And then I hit profit target 2 right here and made $3,300, okay? You could also trade the mini crude. The mini crude, the QM, is half the size. So you would have made half the profits and you could have assumed half of the risk, okay? So again, is mini crude for a $2,500 account a good way to trade initially? No, absolutely not. What you could do though is trade the USO, okay? Basically trade a call, okay? That would have made you money. So there's a lot of options by using my seasonality techniques to make monies in different ways, okay? Let's go back to the S&P because I know a lot of people like the S&P. One of the trades that's highly accurate, and by the way, I did predict down here that we would be going all-time highs. And again, not because I'm a smarter guy than everybody. I'm going off of seasonal data to tell me that, okay? And you can see there'll be resistance right about here, folks. So I don't know if it'll get there today, right? A lot of resistance. What it needs to do is come up, come on back down, and then that'll be support for the move higher, okay? It will go to all-time highs over the next month and a half here, just based off of pure seasonal data, okay? But anyway, right here, on June 28th, I call this my July 4th trade. Typically right around anywhere from 2 to 5 days before the July 4th holiday, it becomes extremely bullish, okay? And I'm talking 90% accuracy. So if you know that, think about the power of that. So again, I don't trade this one as much publicly because of the risk involved. But what I wanted to show you is, again, if you know that, there's so many different ways of trading this, right? I also like to trade the RTI, the Russell, which has a little bit less risk. You won't take as much heat and so forth. But just by knowing that, you know, this was a great trade I placed that I'm still in on one contract. Right about here is my stop loss on my last contract. But, you know, this thing could keep riding, okay? But again, nothing special. I just knew a lot of sideways days here. There was a high likelihood, over 90%, due to the July 4th holiday, that price is going to go higher. And again, if you know that, there's so many ways of trading that, right? So That was more recent. I want to give you some, recent ones as well. One of my favorite markets to trade, the lumber, okay? And again, a good ETF on that is, for example, wood. So for example, this is a really good seasonal long right here. March through the end of May, okay? So if you want to buy calls, for example, on wood, WOOD, during this time frame, you can make lots of money as well. But again, going back to the futures, lumber is LBS. I went long right here, and this was a live trade with a service. Hit profit target 1 right here. Profit target 2 right here. Again, remember from my methodologies, once you hit profit target 1, my risk is off the table. My other 2 contracts are a break even, okay? So you're now in this trade, you're making money with no risk on the table. And then basically right here, I ended up following it to a small moving average because I knew that it looked like from my momentum at the time, it was getting ready to go on the downside. I got out, made $8,900, okay, on that runner, just that runner leg of it, okay? So again, just want to show you some of the power of these seasonal moves, okay, and why I use multiple contracts. If you were a small lot and you were trading, you wouldn't want to trade lumber with a $5,000 account, but let's just say you had a $10,000 account, you were trading 1 contract, right at profit target 1 is where I would have recommended getting out, okay? Now, there's also a short July through October lumber trade, okay? So right around here, I started looking for shorts. Okay? I didn't pull this trigger with my live subscribers. I didn't do this trade at all yet. But what I'm showing you is July to October is a good short time to look for shorts. And you see it had a gap down today. But what I'm looking for now would be a pullback to right around the original price right here. And then I'll look to short lumber, okay? So again, just knowing the probability of over 80% lumber is going to be short or lower during this time frame gives you a huge advantage, right? Okay, let me go over to questions real quick. Okay, perfect. I think I've answered everything so far. Okay, let's talk about copper. This is a trade I went short on May 3rd. So again, what I was looking for, there's typically a short seasonal aspect, end of April through May. Okay, so what that tells me is I'm not looking for longs during that time frame. Okay, even if my other indicators say, hey, it's a good long, I don't do it. I do not go against a seasonal. Okay, but right here, I went short. Went 3 days later, hit profit target 1. Or wait, I'm sorry, right here. What happened was I actually had a limit order right here. This was a live trade I did. So on the same day, I got triggered right here. Again, I don't always do market orders. I did a limit order. Price came up, got me. And then on the same day, or the next day, I'm sorry, it hit my profit target 1 there. Okay, let me just blow that up for you. Okay. So again, the beauty of that is once profit target 1 is hit, next day, move my stop to break even. I don't have to worry about it anymore. And then day later, it hit my profit target 2. Okay. So in this case, I made $977 on hitting profit target 1 with 1 contract. And then my second contract, I made $2,100. So, you know what, $3,100 roughly on this particular trade. That was done live, with my video newsletter. Okay. And then when I'm happening, that third contract, which was at break even, got stopped out right here. Okay. But what can happen, folks, this move right here could have been right here, right? That's the power of the seasonal app. It just didn't happen that time. After profit target 2, it knocked me out. Okay. Well, let's talk about 10-year notes. This is also goes well with the 30-year bonds. I know a lot of people like to trade bonds. You can also trade the TLT, which I'll give an example of that in just a moment. But so this is a case where I entered in on June 19th. June is a really bullish month in bonds, okay? Again, over 88% bullish. So I'm only looking for longs during that time frame, okay? I got in on 6/19. I hit profit target 1 on the same day. So again, the beauty of that, then you move your original. So either if you're trading one contract, you're out same day with your one contract profit. If you're trading multiple contracts, you move your stop to break even on the other two. Okay? And in this case, by doing that, because that's what I did, because I made profit on the same one, day 2 it actually stopped me out. So I was out of this trade before I got the runner. Okay, before I got the runner to profit target 2. Now I actually got into another trade during this time frame as well, because what I do is when a seasonal is that strong, I don't just make the trade once. If I get knocked out, I'll go back in, and I'll do that several times. Okay. What am I looking for right now on 10-year bonds? The month of August is extremely bullish again. So I wouldn't be surprised if it goes sideways for a while, maybe down a little bit. But more than likely, I'll be recommending a trade going into August long bonds. Just from a true seasonal standpoint, then using the triggers to make it happen. Okay. This is a trade I'm currently in right now is corn. Those of you that like to trade ags. There's a really good July short in corn. Okay. So I got in right here. It went against me one day, and then it's made its move, hit profit target 1 right here. Okay. So again, move my stop to break even. If you were trading the regular size corn, you made $350 so far on this trade. If you're trading the micros, you made $35. Okay. Here's how crazy the markets are, folks. Today was a crop report. So it literally came 1 tick from hitting my profit target 1. See my limit order out there? Because it's a live trade. So it came 1 tick and it didn't knock me in. Okay. No, the market's not looking at me saying, hey, let's get Dr. Keith. That's just the way markets work sometimes. But my bottom line is I have this all in place ahead of time, folks, right? So you don't have to watch it during the day. If it comes back up and breaks me, it stops me out at break even on my other 2 contracts here, so be it, right? That's trading. But my risk is defined. There's no more risk in this trade. I made my $350 with regular size or my $35 with the micro. My thought process will be maybe tomorrow this will start resuming its downtrend now after the crop report came out. If not, I will probably if I get stopped out at break even on my other 2 contracts, I'll probably re-enter short pretty aggressively because next week, folks, is one of the strongest weekly seasonals in corn that we have. Okay, a little free tidbit there. Okay, but again, what that can do is keep you out of trouble. You don't want to go long during a strong seasonal short. Okay, the odds are just against you. Okay. One of my favorite, I'm going to show you one more example. I didn't mark this up because but I want to show you one of my favorite instruments. I should have done this ahead of time. I apologize. Is the Mexican peso. Okay. So very trendy, great instrument to trade. It's one of my favorites. Okay. But anyway, so just looking at the peso here. July going long, you're going to make money from the beginning of July to the end of July. 90% probability is going to be higher. Okay, so again, I don't just go long on July 1. Well, of course, if you did, right, you would have been on July 2nd. You would be making money just off the seasonal aspect, right? But what I do is, again, based off of my entry techniques, I then look to get into this. Okay, and I haven't got in yet. What I'm waiting for now is a pullback of some sort to right here to go long. But again, knowing 90% likelihood this thing's going to go higher during this month, folks, of July, you can make a lot of money, okay? And the peso is a great trendy instrument with a lot of great seasonals throughout the year, okay? Okay, so let me check for questions. All right, good. All right, I'm going to go back to the PowerPoints now. What I wanted to show you is my track record since working with Right Line Trading. Okay? So basically started trading with them end of February. My success rate is 89%. Again, these are all verifiable, folks. I'm not out to try to trick anybody here. This is just the way I trade. High probability setups, okay? So if you were trading one contract with the regular size contract, okay? Following this system, I had 3 losses, right? I had a little stretch there that I'm going to blame on my kids. It wasn't me. No, it just happens in trading. But you'd be up $21,000, okay? That's basically hitting profit target 1, then you get out of the trade, okay? If you were going to use the micro, right, you could do 1, 2, or 3 contracts. Generally, you're going to be, roughly one-tenth of that, right? So you're going to be around $1,500 or so using the micro. So again, if you started with a $2,500 account, you're up to $4,000 in just a few months. You're pretty happy, right? That's how you build up those micro accounts. Okay. But if you do 2 contracts, basically what that means is at profit target 1, you take off, right, like you did here, and then at profit target 2, you take off the second contract. These are equal because in this particular trade, I got stopped out after I hit profit target 1, right? Same here. But what you can see is if you hit profit target 2, like on the lumber, right? Profit target 1, I made 462, and profit target 2 contract system, I made 1,012. So that's basically how that is. So with 2 contracts, I'm up just a little bit more versus the 1 contract. And then with the 3 contract trading system, my favorite, the multiples of 3 contracts, you'd be up almost 25,000, and you actually would be right now because I don't have the corn in here yet because I haven't closed that trade. Okay, you're making some pretty good money. So again, high probability trades. These are all verifiable through the subscriber service. 89% win rate right now. Okay. Again, if you have any questions on that, let me know. And again, what I'm starting to do more of now, based off of traders asking, I'm starting to recommend, and I will start recommending more option trades so that if you prefer to trade options, you can use a seasonal aspect for high probability trades. Again, high level, some different micros you can trade. You can trade micros on the natural gas. Again, if you have a broker already, for example, if you use NinjaTrader, you can go to their website. They have it all listed with their margins. They're very close to THINKORSWIM here. So the margins that I showed you earlier are very close. So the myth that you have to have large accounts to swing trade futures, for example, is not true. You can trade micros. You can set it up in the evening so that you don't have to manage it throughout the day if you're working a full-time job in that, and then you can slowly watch that account build up, okay? But natural gas, there's a mini crude. Most of the currencies have micros. Corn, soybeans, wheat, gold, silver, I missed here, silver as well, okay? A couple trades I recently did on the options was the bond, the TLT ETF, okay? Had a nice return. It was 49% on that. Just closed out the corn trade at around a 50% profit on that as well. So again, you can do pretty well trading options with knowing the seasonals are on your side. Okay. So if you don't have an account, you're looking, you can use NinjaTrader. I know with Right Line Trading with some of Mark's fantastic services, you may already have a NinjaTrader. You can get with Wade or your broker and ask about what they recommend as far as using the micros. Basically, again, if you're going to trade one contract futures from most, minimum of $5,000 is recommended. But I think you really should start with the micros and build up the account, okay? Or trade the option trade. You're going to trade 3 contract trades, probably 25,000 or more. But those of you that have that in your account, you can really watch that grow quickly. If you're going to just say, you know what, I think this is a good opportunity to make some high probability trades. I only have a couple $1,000s to start, you know, then I'd recommend the E-micros. Just trade the E-micros, folks, okay? Thinkorswim, again, that's the broker I use. I just put the number in there. You can sign up on the website. What I like about Thinkorswim is you can get just a free account, okay? So you could actually just start simulating and placing the trades and learning Thinkorswim, you know, before you're not obligated to have to fund it right away, which is really nice, okay? And you know, the nice thing about Thinkorswim, you can trade futures, forex, stocks, options, all on one platform, okay? Which is what I like to do. I mainly trade futures and options, so based off of that, you know, they're a good platform for me. I also use TradeStation for some of the scanning features as well. Okay, so and we're going to put this offer in the chat, so you'll be able to see this as well. And if you're listening to the recording, you can always call the office and so forth. But because we've seen a need over the last 3 months and things are working out well, clients are extremely happy. I'm getting really good feedback. And like I mentioned, some of the feedback is, I'm very interested, but I want to trade more options. We're adding more recommendations on options. You can try it risk-free, folks, the video newsletter service, okay? $9 for 30 days, and we'll give you the money back. We don't care. If you decide for whatever reason you don't like it, just ask for the money back, okay? We want some commitment. We want you to be able to spend the time to put in the credit card for the $9 offer. But again, if you're not happy, we're not here to take your money. You saw the results, right? I mean, if you follow the system, you know, you should do really well. After that, it's $99. Money back guarantee, cancel anytime. Basically, what do you get? So you're going to get anywhere from 3 to 5, on average, folks, 3 to 5 video newsletters a week. And that doesn't usually include the actual trade recommendation. So anytime I recommend a trade, you can get signed up for the text alert. Well, I'll text it out to you. Typically, when I set up trades is in the early evenings. I'll send a video out. It'll have, just like I showed you, the profit targets, the stop losses. This is all done ahead of time. And I'll also give you like a Sunday week ahead. These are the 6 or 7 different things I'm looking for this week to pull the trigger on once there's a trigger and so forth, okay? And then I like to update and educate throughout the week. Again, I am a professor at heart. I love to educate and feel I'm pretty good at it. You know, I'm pretty good at teaching people on how to follow a system very accurately. Okay, so again, no risk. You can go ahead and get it signed up. You get trades via the video newsletter. You can also sign up for text updates if you want them, if you're in the US. And again, I will give specific entry and exit and stops on every single trade I do out there. There's no what if, okay? I keep that running total and publish that like I just showed you with my success rates. And then you can always email me as you ask questions on any of my trades or just in general. I love talking to many folks. I'll just give a call as well and see how they're doing. If they have questions, you know, sometimes the phone's a better way to go, but that's my email as well, okay? And then lastly, this is my contact information. There's the link in the chat if you're interested in signing up. I also do offer a one-on-one mentoring session, and we are having a special offer right now, half off. So if it's something that, you know, you're not sure about, hold off. But if it's something that, hey, you know what, maybe I do want to really spend some good time with Dr. Keith to learn specifically how he's placing these trades, what he does, there's always that link in the website to do the one-on-one mentoring. Again, I love teaching. I love showing how I trade. Again, that's what I do for a living with my students. So feel free, if you're ever interested as well, to sign up for the one-on-one mentoring. Okay. Other than that, let me just check the chat one more time for any final questions. It is recorded. Absolutely. We'll send this out right after. One of the question is, does this particular service teach you how I place all the trades? So the video newsletter itself is just going to come out and say, okay, here's the trade recommendation I'm doing. Here's my stop loss. Here's my profit targets. I'm going to be offering classes in the future on how I do the trades and what I look for and so forth. Or there's always the mentoring. And within my video newsletter, I do a lot of education because that's what I do for a living. So I don't just say, here's the trade. I'll usually explain why, the window of the seasonality, and so forth as well. Okay. One question is, do I have a longer historical? So the reason I put that one in there, to me, what really counts is what I'm doing live in front of people. Okay. And I've been an educator and teaching students for 12 years. I just recently, this year, started offering my service live. Okay. So I've been about 88% for 5 years now, each year over year. Problem is, some of those weren't just seasonal trades, because in the past I did other type of trading as well that are all high probability. So I didn't digest all that different, but overall I'm about anywhere from 85 to 90% accurate on my trades. Okay. But again, that's why we give the free trial. Give it a shot, see what you think. You can see the trading that I've done live in front of everybody, and you can see how accurate that this type of trading is. Okay. Let's see here. So one of the questions is, what is the max drawdown? I mean, it depends on the instrument, right? You know, if you're trading the S&Ps, you're going to have a larger max drawdown than if you're trading, you know, corn. Okay. But I usually, and that's why when I recommend a trade, you got to look at the risk, right? Because I have a stop loss in the amount that per contract, what that's going to risk you. If you're not okay with that risk, don't take that trade. Okay. Typically, anywhere from 1 to 3 trades a week. And again, it just depends, because I'm not going to force a trade. I want to win. Okay. I want to make money. So certain weeks will have more trades than others. And but on average, 2 to 3 trades a week is an average throughout my trading. Okay. Make plenty of money on 2 to 3 trades a week for sure. Great question. So again, another question on, is there a way to learn this system? You know, absolutely. Like I said, you can do the one-on-one mentoring. A lot of what I have, a lot of the way I trade seasonals is based off of my significant back testing over the last 12 years. I'm always refining my trades. Okay. I'm not going to publicly just throw that out there, because that's my work and research. But I do give a lot of information in my mentoring, or I'm also going to, in the future, hold webinars on more specifics on what I look for, and create some watch lists to show all of you. Okay, so is it something that you'll be able to learn if you follow me and like what I do? Absolutely. This isn't a hidden secret. I will definitely give you the tools and how I've been so accurate over the years, so that you can trade just like I do. Okay, that is definitely my long-term goal there. Okay, this service is specifically around the video newsletter is specifically around, here's the trades I'm taking, you know, and then you can decide if you like the trade or not, and based off the accuracy. But there's more to come for sure. All right, so again, it should be posted in the chat for you if you're interested in signing up, or you can always call the office or go onto the website. Other than that, thank you so much for attending. I appreciate your time. I know it's extremely valuable this time of the day. And if you have any questions at all, feel free to send me an email, folks. Okay? Again, it's Dr. Keith at rightlinetrading.com. All right, thank you. Have a great day now. Bye.